The market breaks out to new all-time highs, closing near the top in a resistance zone. We expect a breakout very soon. This is Invest with Jacob. So the market moved up into a resistance zone at the all-time highs and couldn't quite push through. Today I want to show you how to find resistance zones overhead when we're in uncharted territory, as well as targets for where the market should hit. We'll get into that in just 1 second. But first, guys, if you're new here, welcome to the show. My name is Jacob Gabbard, and this is Invest with Jacob. And I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, guys, so how do you find a resistance zone overhead when you're at all-time highs? You know, when you find support, you can go back and look at breakout zones. You can look at levels where it kind of flattened and created a base, just different things. You have different data. But when it's moving higher, there's nothing but clean air overhead. So how do you find a resistance zone? We're going to look at that and figure out how to find overhead targets, and that's best seen in the chart. So let's jump in now. Okay, guys, so here we are on the 5-minute SPX chart. And I'm not going to give the big picture overview today because I got a great idea from Andre, one of our members, to do a standalone video on that and have it available to view at any time so that you can see where we're at in the overall market structure of Elliott Wave, going back decades. So I will have that out this weekend. Look for it on Monday. It'll be called The Big Picture. So how do we figure out that this resistance zone is where it is? Okay, so the first thing we have to understand is Fibonacci levels. Now, we've talked about that in many videos. And how do we get those Fibonacci levels? Well, we have to measure. So we have a tool for that. It's called the trend-based Fibonacci extension tool. And what we do is we have a wave 1 up here, a wave 2 down, and then we have a smaller degree, wave 1 and 2, which is why they're in different letters. So these are a number 1 and a number 2, and these are a Roman numeral 1 and a Roman numeral 2, telling us that this is a different degree or different level, a smaller level, than these bigger waves here. All right. So to understand our resistance zone, we measure our smaller waves because, as we know, all impulsive Elliott waves break down into 5 subwaves. Okay. So we get our tool, and we go to the bottom of wave 2, and we measure to the top of wave 1, and then we pull back to the bottom of the smaller wave 2 there. Okay. And you can see the fib levels there. Okay. The 0.618, which is where we basically hit our head here the first time we moved up and then pulled back. So when we started pulling back here, okay, once we dropped down, we saw that we hit the 618 fib and bounced, okay, or got rejected, I guess, didn't bounce. We got rejected. That tells us that that's resistance, all right? That's the start of resistance. The next natural resistance level, or the top of the next resistance, is the next fib up, which is the 0.764, which is basically 4370. So from 4350 to 4370 becomes our natural resistance zone. And that's how you figure it out. Like when you don't have anything up here, how do you know where they are? It's the Fibonacci levels. Okay, that tells us where resistance is. And you saw that here, it bounced right off the fib, and then it came up and bounced off of it again, and then it came up and pushed through it, and now it's trying to push through it and get through this resistance. And then once it does, we should see a breakout towards 4,400, which will be our next resistance level, which basically is a natural thing. When you get to a round number that lines up with a fib, it becomes a pretty natural resistance level. So knowing that, okay, how do we understand how high this should go before we get another significant pullback? Well, we have to understand our targets. A wave 3 of 3, which, okay, if you have this big number 1, and this big number 2, right? Now we're making a big number 3 up here, way up here, okay, off the screen. So inside of that big number 3, there's 5 subwaves. So this is wave 1 of 3, wave 2 of 3, and then we're building towards wave 3 of 3, which usually targets the 1.236 or 1.272 fib. They're kind of interchangeable. I was talking to one of our members about that today. 1.236 targets 44.28, and the 272 is 44.32. So basically 44.30, right in that range, is going to be our target for this move up that we have our SPY calls on. So we're watching the SP 500. We want it to hit this target up here at 44.30, right in that range. We'll look to sell there, and then we should expect a pullback at that point. Okay, so basically what you're looking at is you're looking at a 5-wave structure that is inside of wave 3. So you go wave 1 up, wave 2 down, wave 3 up to the fib here, wave 4 down, and then wave 5 is going to actually target a different 1.236 fib at 4601.99. So how do we get this fib? Okay, so what we did is we have a larger degree wave. All right, so we measured to find out the target of this wave right here, this from 2 to 3. That's what we measured to find that target. It's a smaller degree. Okay, to find this target up here at 4600, we had to zoom out and measure a much larger degree wave 1-2 setup. All right, and that gave us this 1236 and 1272 target around 4600. Once we do hit the top of wave 5 here to complete bigger wave 3, so remember 1, bigger wave 1, bigger wave 2, bigger wave 3, then we will start bigger wave 4, which will be a significant pullback at that point, and we can measure for that once we get to the top of wave 3. So that's how we find resistance and targets using Fibonacci levels. We use measurements usually after waves 1 and 2 are complete of a cycle, whether it's a small degree or a large degree. We need to get waves 1 and 2 in place, so then we can use our trend-based fib extension tool to get our Fibonacci levels on there. And once we have our Fibonacci levels, we can define our wave targets so that we can trade for them. We can define our resistance zones so we understand why the market stalls and where, and it gives us a solid foundation of our support and resistance zones to make our trades much easier to navigate. Okay, guys, if you want to get my real-time market updates where I'm giving these targets out and I'm telling you what we're expecting the market to do and when we're expecting to break out and how, all right, you need to get in my Facebook group. There's a link down below, so click that link, get in my Facebook group, and you'll find a link to Slack, which is just a free chat channel. We get on there, and I give you real-time market updates. I give you all of our trade setups, our buy alerts, our sell alerts. I tell you what's going on in the market. It's a great place to be. A lot of great guys in there. We'd love to have you. The only requirement, the only thing you have to do, you got to hit subscribe on this channel. So subscribe to this channel, all right, and then you can get my Facebook group and in our real-time trading area. Okay, guys, so key takeaways for today. We're basically watching this resistance zone of 4350 to 4370, all right? If we push up through 4370, we should accelerate towards 4400 pretty quickly. I kind of expect this to happen by Monday, maybe by the end of the week, but by Monday. Tuesday is pullback Tuesday. If you've been in the chat group, you know that for the last 4+ months, we have had a 15-point plus pullback on every Tuesday. It's a weird pattern, but it continues to happen. So until it doesn't, I'm going to believe it will. It's kind of an oddity, but I really do expect us, though, to break out of this resistance zone by the end of the week and up towards close to 4,400 and start challenging that. So that is the market update for today. I will talk to you tomorrow.